Good evening, everybody. This is Jeff Scott, and welcome to this week's top-down review. Let me get my stuff all set up here, and we will begin. For those that are return visitors, welcome back. And for those that are here for the first time, thanks for coming by. Don't let yourself be overwhelmed by the names of some of the indicators. They're just different momentum indicators. And everything I have is available in stock, meaning when you download and put the add-ons in, which are free with HGSI, and most of which can also be created in other programs. This is February 22nd. It is 8 p.m. and the futures market has opened and is relatively flat thus far, as we'll look at soon. I entitled it Melt Up or Pause to Refresh. Boy, last week was what an incredible week for growth stocks. I think Cancelim investors, HGSI type investors, had a great week across the board, really a great 2 or 3 weeks. It almost felt like we were starting to melt up. One of my holdings, Cyber, it went crazy this week. For me, it's ran from 38 to 60 in maybe 8 trading days. And I think it's indicative of what this melt up phenomenon. So the question I have today, is going into this week, will the melt up continue? Or will we do a pause to refresh? Again, I didn't say a crash or a bear market. I said just a pause to refresh. Disclaimer, educational purposes only. I'm a doctor, not a broker. I'm independent. I have a lot of friends that own software companies, but I don't own any of their companies. I have paid for all the tools that I demonstrate. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I always entitle everything I do about to be your own guru, something I learned from this great guy here, Ian Woodward. I've got a lot of folks that have been my gurus or people that I've listened to and learned from. I don't think I practice like any of them. I try to create my own style of practice of trading. The doctor part of me came through. Whether it's Cancelim from O'Neill, and then taken to another degree with Morales and Catcher, whether it's Ian and Ron, Ian Woodward and Ron Brown, I'll talk about them later, who really took the basics of Cancelim and I think improved them. And we are clearly in HGSI world heavily based in Cancelim, but I think that we have evolved beyond the basic tenets. Alexander Elder and Kerry Lavorne over here, with Alexander's books. He just has a new edition of Trading for a Living come out. I'll be sitting in a live session at the Traders Expo given by Alexander, I think, on Monday. John Person, close friend here in South Florida, where it was in the 80s today. We actually went down, Sherry and I, to Key West or Key Largo for a couple of days. It was great. And I use a lot of his tools, specifically some of his scanning tools, looking for high close and low close dojis. Person PS buy signal, which is something that is in TOS, and also his pivots. In addition, I supplement that with my money management from Van Tharp, my volume price analysis, the Kindle edition. Thomas Dorsey, I'm not really a point and figure guy to the point where I make my own point and figure charts, but I find his site to be very useful, where he does a lot of comparative relative strength evaluations, which is exactly what I'm doing in HGSI, and he does his using point and figure, bullish percents, etc. And I find that supplements the work that I'm already doing. Lastly, my good buddy from Canada who shared the stage with me, George Lee. We had a great meeting here a couple weeks ago and really appreciate those that took the effort to come on down. You'll probably see my desktop tonight because I didn't hide it. I have a lot of programs. If I had to redo it all, I think that you'd see me with TradeStation, Thinkorswim, and Genesis, High Growth Stock Investor, EdgeRater, Seasonal Analysis with Magenta, websites, and I'm going to actually come out of the closet a little bit, and I'm going to add VectorVest. It's a program I've had for a long time. I don't like the fact that it uses proprietary indicators that I cannot recreate elsewhere or find them elsewhere. but it does find stocks that are very consistent with what I find using my HGSI type product. One thing that they did come out with, and what's really the reason why it moves up to the A page here, is this Options Pro package. It's if you trade options, it does some great things from a perspective of scanning to find great option choices, looking at undervalued, overvalued options, and then looking at volatility skews. And imagine if you can find spreads where the near-term volatility, what you're buying, if you're buying the spread, is low, but the far out volatility is high, so that you get paid for a higher volatility than the volatility that you're buying. Just another piece of the tools that you might use in your trading. Stock patterns are cyclical. You have to know where you are. And again, one of the things that VectorVest does a good job is laying out and making market calls. HGS stocks, the stocks that we trade, they go up like rockets. They fall like rocks. You need to know where you are. And I talked 2 weeks ago, and I think I was correct, that we were starting another leg up. Why does that matter? Because how I address the market here in stage 2 versus stage 4 differs dramatically. And in stage 2, I'm buying stocks, I'm buying calls, I'm selling puts, I'm considering covered calls, although at the beginning of a big run, I don't want to be capping the value of my stocks. And I'm selling bull put spreads, meaning I'm selling a put which I expect to expire worthless, but buying a put below it, sort of covering it so that I protect myself from a disaster. If I think this market has turned, then I'm doing things like bear call spreads, meaning I'm selling a near call and buying a far call to protect me, thinking that the stock price is going down, so the calls will expire worthless. I buy puts, I sell calls, I short stock, and I do contra ETFs. So how I play, and think about a playbook, a football game, I've got my offensive plays and I've got my defensive plays. Part of my offense is to know what's happening around me. That includes what news is coming out this year, and this month rather, this week. You can see here we got some claims coming out on February 26th, which is got to be, I guess, Thursday. We got durable goods. We got the GDP. We got the Chicago PMI and University of Michigan sentiment figures. We missed on that one last month, and it did pull back some the market. We got some mortgage numbers as well. We also have a huge week of earnings, and it's only your fault if you don't know you have earnings coming. Now, I think it's totally reasonable to hold something over earnings, especially if you've got some profit in. I might be inclined at some point in time to potentially collar a stock going into earnings or sell some premium as the volatility goes up, just in case the stock drops by selling a call. But, you know, whatever decision you make, don't let the decision be the oops decision, meaning I didn't know my earnings were coming. I really didn't think about what I wanted to do. I remain a big fan of seasonality. As I mentioned last week, the product I'm using now is called Seasonality Trader, which is sort of a descendant of Magenta Trader. And the contact person for this is Eric at Eric Hay, which looks like eritchie.com. And what's really neat is it starts off with a calendar, and these are stocks such as WLL, which is a 10-1, I believe, or 9-1 up move with an average up move here, looks like of 10%. But once you find something to look at, what you can do is then open up a chart, and here's an example of CON. Now, I'm not necessarily advocating CONN, okay? But let me just show you what the kind of things are that I look at in a seasonality program. Typing in CONN, and it's showing me a chart. This is the stock price. This is a a channel that it's been trading in, and this is generated by the program. It's a linear regression type channel. The green and the red represent scanners that are looking for strong or weak seasonal time of the year. In green, I have a 5-year predictor of seasonality. In yellow, I have a 10-year predictor in seasonality. When I highlight this, you can see above that it shows from February 24th to April 6th that that CONN has gone up 9 out of 10 years, the average return of 24.3%. The 1 year it did not go up, it was down 1.1%. And so if you know that, then you got to take a look at the stock and decide if it's a stock you want to buy. Now the problem with CON is you could see where my crosshairs is it's had some issues with earnings. In fact, the last couple of times, here's another earnings here, it's gapped down against it as they had problem with some of their credit facilities and getting paid. So that might be something to be careful about, yet of late, CON has started behaving better, and you can see it's in a nice channel here. So I know that at some point in the next couple of days, we expect to have earnings come out, and those earnings, historically, this quarter, I guess after the Christmas season, have caused a big move in the stock. Now, this isn't Priceline, where we had this big move here and we're in the midst of it. If you go back, for example, just to February 18th and look at the next month and a half, 9 out of 10 years positive with a 10% return, which is a big move on Priceline, and we're getting that move right now. We looked at Netflix earlier in the year. We got that move here that was predicted by seasonality, where my crosshairs are. I made a call on Paraxel, PRXL. Now remember, this is not a one-day call. And my call on Paraxel was that it looked interesting from an earnings perspective as well. And I guess what I would say about Paraxel is that it's probably, that's not what I wanted to do, too early to call. I looked at my position over the weekend as I reviewed all my charts as I would normally do. And, you know, we're sort of in a choppy area, but I'm almost back to break even on the position I took. And remember, from February 10th to March 23, I was looking at an 8% return, 7 out of 10 positive. That's not the greatest, perhaps maybe one I shouldn't have taken. As I said, right now I'm holding my own. And then there's another one that I took this week called Chart Industries. It's an oil services stock in that they make, I think, pumps and stuff. And you could see it's actually in a very tight channel here. Now, the good news about being in a tight channel is even if it doesn't move in it with its seasonality, it's probably, you know, it's in a nice tight channel going up. And if it broke down below that channel, I might have reason to get out. Let me enlarge it a little bit and see. It's not going to do what I want it to do. So what I looked at last week was, again, not perfect years. This is only 6 out of 8 years. But the 6 years it's up, it's averaging 16.2% return. The 2 years it's down, it averaged 1.3%. So I made a small position in GTLS. And I like the fact that both the green and the yellow are moving up so much because they're consistent with each other. So I use seasonality to screen stocks that I'm looking to buy. I also look at the calendar and then dive into the calendar and try and identify stocks that might fit my characteristics of what I like to buy. And seasonality, as we showed you with the Netflix and some of the others, can often be a driver of a big move. Lastly, now's the time if you're interested, and I'm going to go into the other view here because I think you'll see it better. There it is. Now's the time to make the play to come to Palos Verdes. The meeting is March 28th through the 30th. It's the Ian and Ron show. I'll have a small part. Typically, Gil Morales joins us. Sometimes Fred Richards. It's really a great event, and whether you're an old-time HGSIer, whether you're a can slimmer who found out about us, now's the time to go. Ian is mid-80s, lower mid-80s, and he's still going like the ever-ready bunny. But I think, we take what we can get, and right now we got a pretty good star still. So I think it's a great time to come, and we look forward to seeing you there. And I'll be there, and I look forward to seeing all my buddies. There you go. Done with the presentation, and let's go on with the rest of the show. So I'm going to start by very quickly reviewing what I saw last week. And I'll tell you, last week was phenomenal. If you didn't make money last week, then something's got to be wrong. In fact, the last 3 weeks have been quite strong. Really, as I see in my portfolio, probably as good as I've ever been after 2 months of the year, or midway through the second month. And much of that gain, frankly, has come in the last 3 weeks. So I'm going to start by going into my this is the group performance analysis is one of the tools in HGSI that allows me to look for leading industries or leading groups and leading searches and scans. And what I've done is I basically, you can see from number 17 down to number 104. So there's about 85, 87 watch groups that I follow on a weekly basis. And I follow them. Some might be stocks that I own, like here in yellow, had a good week, up 2.5%. Some might be stocks I'm interested in buying. Some might be various scans to give me an idea of what's working in the market and what's not working. So the first thing I do is I look for the IBD 50 was up 2.34, the HGS 100 was up 2.20. I mentioned what I was up in the same range. That tells me HGSI and growth stocks and can slim stocks were working. What's interesting is the S&P 500 is all the way down here at 0.63. You could see that very few stocks were not working. What's interesting was that the best stocks under $15 wasn't working. The blog game day filter was not working. Buyable gap ups were not working, at least on my buy watch list. In fact, the buy watch really underperformed my current stocks. Now, the buy watch just means it's something I'm going to look for. I'm pretty certain that the reason why my performance was so good is related to FireEye and Cyber, two of my bigger holdings. Also, things that are interesting here is that the big volume stocks on Friday last week, although only 4 out of 6 were up for the following week, they were up 4.26%. Now, M&K Bible gap ups, which is different than the stocks that made my buy watch list that were also Bible gap ups, were up 2.5%. And you can get the Bible gap ups from my TradeStation scan were up 2.3. So as you could see, very bullish week, and the growth stocks that we typically look for, and I look for on this call, outperformed. Very quickly, no surprise, no Hindi. In fact, we got 5% new highs on the NYSE and 0.34 new lows, so nothing close to bad. Bucketology, we're probably about 5, 7, probably getting about, I think we're now approaching 4, 9, 10, probably 10 or 11 days after we crossed above 70%. So based upon what I've learned from Ian, we're probably getting close where we're going to have a pause or a pullback, and that you don't maintain above 70% here for more than 14 or 15 days in a typical rally. What are we looking at here? If you think about a market that's in an uptrend, a stock's probably, and this is looking at the S&P 1500, each of the 1500 stocks, and looking where they are in relationship to the Bollinger Band. This is looking at what percent are above the midline versus below. So if I'm in an uptrend, my stocks are typically bouncing up to the upper band and pulling back to the midline, upper band into the midline. And when this many is above the upper band, that's a pretty strong bull. Now, what tells me is we're not necessarily ready to pull back is that we only got about 7% of the stocks that are above the upper band. And I usually see it get closer to 20 or 30 before the market pauses or goes sideways or pulls back. If I look at Ian's market indicator, very quickly, we had a series of kahunas back here on February 2nd and 3rd. Market went to green right before we did our meeting on the 5th. And as you can see, we've got all green here on the Woody indicator. Now, one thing that might be concerning is if you look at the numbers here, 0.9, 0.86, 0.97, 0.97, 0.9, 0.86, 0.9, 0.95, 0.9, and 0.91, that tells me that every major market index is up near the top of its Bollinger Bands. So that might be some reason to think that a pause to refresh is coming sooner than later. On that note, I usually shut this down and I pull over my trade station just to get a sense of using my elder indicator package of whether or not it's still okay to be going long in this market. Now let me find where I put my mouse. Hello, mouse. There you are. I got multiple monitors. You can't see my mouse. I can't see it either. Half the time it gets lost. So it's very simple. What I do here is I go into my elder indicator and I go under index and I look at the NASDAQ. And I'm looking really at two things on this chart view. At least I look at a lot more, but for the purpose of today, I'll go over 2.5 things. Number one, I look at the color of the last price bar. This is daily, weekly, and monthly. Green, and I look at the color as a filter. This is Elder's Impulse Indicator. If it's green, it's okay for me to go long or to stay pat in a hold position. If it's red, it's okay to go short or stay or hold, but not to go long. So I'm not shorting on green bars, and I'm not going long on red bars. If it's blue, I have my choice in doing whatever I want to do. The little red dots above the price bar represent his MACD divergence scanner. And it's not always perfect, but higher high here and not a higher high on the histogram. This is what the MACD divergence scanner is showing me. And when you see the MACD divergence, it makes you feel or think that there may be less participation in the market, in the direction that the market's been going. It might be an early sign of a potential pullback. Notice that it takes weeks, though, especially on this weekly where we had MACD divergence for about 2 months before we saw a pullback. So I'm looking at the color of the bar, the MACD divergence, and I'll also point out that the high jump bar on the NASDAQ is at the point where it's expected to turn around, and it's turned around in the past. This blue bar here is a PPS buy. The magenta one is a PPS sell. And I think that's all we need to look at here. So the NASDAQ clearly on a buy with up at the top of the high jump. The Dow getting close to the top, but not quite. It's green. It's got a MACD divergence dot. All these are in a PPS pivot buy signal. Russell futures, blue, green, and green. You can see clearly the MACD divergence as well. Let me just see what's going on here. Is this today? Nope. All right, that's 220. Okay, very good. So the Russell futures are a little bit less exciting with the blue than the others. The S&P, or at least S&P futures, we got blue with the MACD divergence light, green and green, so you can still be buying on the S&P. NASDAQ 100, green, green. Everything's got the MACD divergence dots. The S&P in the cash market, blue with the S&P with the MACD divergence dots, and you could see approaching, it's at above 95% in the S&P 100. Now, one of the things that I like to do is I like to buy stocks that are in uptrend that pull back to resistance. And I've used a number of different tools to get them, and those that have been using my indicator set know that I look for things such as a confluence of indicators demonstrating a change. And so in my combined dots, just for example, I have Bible gap ups on the top line, which we don't have one here. Then I have pocket pivots. Then I have MOBO breakouts or breakdowns and squeezes, PSAR reversals, red candle high, green candle low, and kahuna forces. And I look for these to start to change colors. But I also have the ability in TradeStation to scan, and one of my favorite things to scan for, and partly why I use TradeStation, are person's got a couple of neat indicators, and my favorite thing to do is I scan my universe of stocks and I look for a buy signal 2. And the reason why I like a buy signal 2 is, by definition, a buy signal 2, let me see if I can get that to highlight, is a daily buy signal at monthly support. So this is a tool that I use to scan the entire market looking for stocks that meet certain criteria. So for example, see if anything here is what I wanted to look at. Let's look at electronic arts. And wait a second, when was this run? Hold on a second. Oh, you know what? I didn't update this one over the weekend because I was out of town. I'm going to run this real quick and I'll come back to it. But the point I want to make is that I believe that one of the things that I can improve my stock hunting capabilities with is by looking at scans or other tools that help me to find stocks that meet criteria that I'm looking for. So I'll come back to this and take a look at some of the things that I found with it in a few minutes. I had a couple of questions from people about how I integrate TradeStation and scans. I'm going to pause it for a second, and I'm going to bring up my Thinkorswim and show you something in there as well. All right, we're back. I wanted to kill my numbers before I got back into the program. So first thing to do is go back and see if my TradeStation is done. And just about done here. The other thing that I'm charting here, just for folks that are unfamiliar with what John Person does, is I chart on balance volume. This is a Person histogram where he's looking for momentum changes. And then these are his PPS buy and sell signals. Now, I don't, sometimes he calls them a buy and sell signal. Often he refers to them as momentum indicators, showing a change in momentum. And what I'm looking for are those stocks that pull back to some type of support and get a momentum change. So here's what I came out. So let's take a look at Newmont Mining. This is one that came up on my screen and made it to my buy list. So what this is finding me are stocks that have a PPS and are sitting within a specific percentage of their monthly support. And what's nice is that I've taken my 8,000 stocks and I've come up with a list of stocks that meet those requirements. So there's no fundamentals here whatsoever. It's just looking for stocks that have traded down or near monthly support, and the screen box is here, and then has a buy signal. A lot of REITs showed up here. Again, a buy signal at monthly support. So if I'm looking for stocks, and let's go take a look at EA. Yeah, we'll pull out EA anyways because we did this a couple days ago. So if I'm looking for stocks that are in a uptrend and pull back to support and then show some evidence of momentum in, is my favorite stock to buy from. And by the way, this stock that's up here, DHY, it's a weird bird. It's a high yield bond closed fund that's actually has a person buy signal off a monthly support. It's just a $2 stock, but it pays a massive dividend. So basically, it's signals that come in. This is person's indicator. I'm looking for that signal coming in. near monthly support, and it just has been for me a great tool for hunting. And what's nice is when I find stocks that are breaking out, like for example, here's Electronic Arts with a Kahuna Force, PSAR, a squeeze, and a mobile breakout occurring on the same day that it had a PPS signal near monthly support. So there's a lot of consistency. The reason why I want to open up thinkorswim is to show you the thinkorswimmers on this, that for example, I can scan all stocks, and let's just clear that filter, and I could actually scan for, I've actually made somewhere in here, PPS buy signals. So I'm looking at volume, price, all stocks, and I can get a list of the stocks that are having a PPS buy signal. And there were plenty, 99. And I can chart these stocks, just to see if there's any here that I actually know and looked at. Let's look at LAD. Go into the charting module. And I know a lot of you are using the VPA charts from Ron. So let me go in here. And what I've done is I've taken Ron's VPA chart, and what we were looking here was, what stock were we looking at? Mental block. We were looking at, we're looking at plug. Oh, I'm sorry. I get so excited when I do this, I can't remember things. Doesn't matter, I'll pick one. Let me pick an expensive one. How about, let's look at United Airlines, UAL. And you'll notice, did I not put, there should be a person's pivot showing up on this one. Is this daily or is this, make sure you're on a daily chart. And you'll notice that I'm able to find on my daily charts my person pivot pop PPS signal. So I scan both in TradeStation and in thinkorswim. I can get a little bit more detailed in TradeStation on the scanning, but I can find these pivot buy signals and sell signals, and you could see how good of a signal this has been in finding swings in United Airlines. So just something else I do in addition to HGSI and the other products I use. I like to highlight some of these things every time I do this. Go into the warehouse view. And just in case somebody wonders, hold on, bring up a website. I didn't do this for the futures, but I can't resist looking at them while I'm here. I think they turned down a few pennies. Yeah, really doing nothing that matters. John Person can be found at www.personsplanet.com. And if you go there, there's actually some free useful information. Let's see where it takes me. I've been stolen. That's interesting. Personsplanet.com. Nope. Personsplanet.com. I was right the first time. PRS. I'll go with the one that says members. And go into home. Personsplanet.com. There's a bunch of interesting things. He has a lot of education he puts on his site for free. And if you want to learn more about his indicators, they're right there. All right. Now let's go back to HGSI. First thing I do when I jump into HGSI is I go into my Major Markets Plus, and I try and understand what's going on in the market. And, you know, I know exactly what's going on, and so do you. It's been a very strong market. But let's go to our top-down view, which is all price and volume, heavily weighted towards the last day, a little bit towards 5 days, and a little bit towards 3 weeks. Why have I been making money as a growth stock investor? Because the mid caps, small caps, and the NASDAQ are up there in the top 6. Silver, gold, volatility, oil, dollar, utilities, and treasuries, gasoline, and commodities on the bottom. So no shocker that the stock investor has had a good couple of weeks. If I look at 1 week or 1 day return, Dow was up 0.9, mid-cap 0.8, NYSE 0.6, NASDAQ 0.6. And over 5 days, the NASDAQ 100, NASDAQ Composite were the leaders, and the laggard was the volatility. Going very quickly and looking at some of the charts of the market because they probably don't look any different than last week. We'll start with what I call my dirty chart, which is the chart that has all my indicators on it, which, by the way, is available to everybody in the add-on on the website at no cost. One of the nice things about the HGSI community is we share things for free. I'm only looking here in the right-hand corner. There's no kahunas and there's no eurekas or phoenixes, so let's get out of this view and go into the cleaner view here. So I do lots of trend lines. This is a trend line that originally was written probably back at this point here, looking to see where the market was going to go. We broke above the trend line and retested, which to me is one of my favorite bullish events, especially when it occurs on an 8-day exponential moving average. This was my target. We took out the target. We've retested, and it looks to me like the least resistance is to continue higher. That said, I'm not stupid enough to ignore the fact that looking at this daily chart, that from the bottom over here to the top in the close on Friday, we have a 6.5% gain in 13 days on the S&P. Sometimes that's a year's worth of a gain. So we are extended on that respect. But on the other hand, we've broken above resistance. Resistance often becomes support going further. And as I said in my opening, I don't know whether we're going to have a pause to refresh or melt up, but I don't think we're going to see a big pullback this week. Now, if I break back below this support line, all bets are off. And again, we have run 6.5% on a short period of time. Let's pull up the NASDAQ. NASDAQ, talk about a move here. Whoops. All I got to do is touch somewhere here. Well, I might not getting that. Hold on a second. To the top here. You can see the NASDAQ's up 8.2% in 13 periods. That's 2.5 weeks. This has been a big run. The NASDAQ too broke above its resistance here on this trend line. Hasn't looked back. If I look at the Russell 2000, and let's pull back some, and let's look at this. To me, that was resistance. Once, twice, 3 times, we've broken through. We haven't looked back. So, a lot of positive things about this market. We've broken out of the trading range, and we are in the midst of a nice bull run. When it stops, we'll know when it stops. The Dow Jones Industrial Average, look at this. It's broken out to a new closing high. It's beat the intraday highs. So I've got new highs on the Dow, the Russell, the S&P, and the NASDAQ is within a couple percent of its all-time highs. This is a bull run. I hope you've been playing. Volatility continues to head down. No surprise, the market goes up. One would expect the volatility to be heading down. And I'll be watching for abrupt changes in volatility to potentially be a signal, perhaps, that this market is going to turn around. Other things that are important to me, the dollar index. I read somewhere it's like 20-year highs. I don't have 20 years worth of data. I don't see how this, I guess the problem here, this is the UUP. So let's see, what do I have to do to that? DXY. Let me see if I have one of my zillions of programs I can pull up here. I always joke with people that I haven't found a program I haven't bought. I buy a lot of programs that I never use, which isn't very smart. My wife isn't happy about that one. Then somebody came up and stumped me, so I spent $3,000 and bought that program so that I couldn't be beaten in number of programs, and I don't use that program any either. There's a handful of programs that have really made it. See, D, X, Y. All right, here's the US dollar index. So let's look at monthly. So US dollar index, so this is the dollar, this isn't the ETF, is at not quite 20-year highs, but it looks to me that we are dealing with the mid-2003 dollar height. So we are at major dollar move here. Now, with rising interest rates and a weak rest of the world, I don't know why the dollar doesn't keep going higher, except it has had a big run, and I'm sure it can impact on U.S. sales of our goods overseas. It's kind of an interesting thing. Our currency gets strong while the EU is weak. We have a tough time selling goods to the EU, so our economy potentially could suffer. The EU gets out of their mess by us buying their goods, and ultimately our dollar pulls back and equalizes things. So I guess that's normal economic cycle. So maybe the massive dollar growth is not a bad thing, and we'll see what it does. I have to admit I'm a bit surprised how strong the market has been despite this massive move in the dollar. In fact, we haven't looked at how massive in a couple of weeks, so just to put numbers on it, I'm going in since May of 2014. I'll go up to the high before it fell back some. 18% move in the dollar. That's a big move in Forex. I bet Gallardi's making a lot of money, our favorite Forex trader. Dollar strong, gold is weak, and gold can't get ahead of itself. Now, what's interesting to me, and I'll look at it real quick, is that Newmont, one of the bigger gold companies, which has sold off like gold, actually looks a lot stronger than the commodity. Based and broke out on Friday on big volume. So, we're seeing the same thing in the oil patch, where oil has maintained weak. This is the USO, failed at the 50, had some big inventory numbers that pushed it back some. Yet, you look at something like FANG as an example of many of the producers actually in a nicer recovery than the commodity is. Lastly on our list was silver, SLV, looks a lot like gold, sort of range bound. So strength in the markets, weakness in the commodities, dollar pulled back some, and volatility has come down quite a bit. Next, I'd like to jump and look at the index groups. Let's go to number 7 here. I don't want to do it in a chart though, do I? I want to go back into, and a lot of people tell me to get a bigger pointer. This is actually the larger pointer. I got to get some other answer because it is hard for me to see sometimes as well. Industry groups 07, you can see I have 176. I care about short term. Let's look at the 2-day. You can see I've got 64 groups up over the last 2 days on the 4s, 73 over 5. So most of the things have been moving for a couple of days. On the downside, I've got 12. Take a quick look at what they are. Restaurants had a huge run. They pulled back some. Fiesta Restaurant Group had great earnings, yet after trading up 15-20% in the aftermarkets and ended up down big on the day and came back, but still came down. Marine shipping, I've heard the Baltic Index has closed like almost a record number of days down in a row. Casinos, auto retailers, home builders, That's for the last 2 days. Looking at 5 days, we see that there's a few more groups. The oil gas services have been down over the last 5 days. This was a group that's been strong. The Schlumbergers and Halliburtons having a couple of bad days. The REITs, I guess with the market going up, the chasing yield is down, and I saw weakness in the REITs. Other energy stocks down now, integrated oils, renewable energy. These are things that were leaders the last couple of weeks. Let's take a look at some of the big up movers very quickly. We'll start with, let's rank it here. Infrastructure software. Boy, sometimes you just get lucky. So let's see if I can, so it doesn't look like I'm talking out of my proverbial butt and making something up. It doesn't have my cost. All right. If I have 3,000 shares and I'm up $95,000, 95,000 divided by 3,000 is about 96, so $32. You take $32 from 70, you get $38. So when I say I bought it at 38, that's why. I put on a put spread, by the way, on Friday. I just thought this thing ran way too much, and I may take it off right away this week, but what this is doing is basically locking in that $70 price, and I sold a $60 put, and if the market goes up on Monday, I'll sell a call probably in the $80 range so that I pay off the $70 put, and I've got a nice little protection. I don't want to give up that much of a gain. So I'm in it at $38. I was going to tell you I was in at $38, but then it would sound like I was making it up. So where's $38 and when did I get in? I got in I thought I got in on this day. And the high was 37.95. All right, I got it early on the day here. I was looking at this stock when it broke up above its 17 and 8-day exponential moving average. Now let's go back to my dirty charts. So the reason why I was looking at it right here is on this day I had a kahuna, a pocket pivot, a PSAR reversal, a Mobo breakout from a squeeze, and starting to turn green above. I believe I put in a buy stop at around $38. Not on this day, but at the would have been right above the high. Yeah, this closed at $37.95, and I put a buy stop in the following day. I didn't take out my $38 on the next day as we pulled back, but I did take out my $38 here. So I got in at $38, and you could see the stock's up to 70. Why did I get in? It's it's an IPO, so I can't really say it's in a long uptrend. It's certainly a pullback, and it broke above the moving averages, and I saw the signals that I scanned for, and I jumped in. So partly why I had such a good week last week, as you can do the math yourself. It's not a giant position for me, but it was enough that it moved the egg a little bit. So we had a big week on CyberArk. Stocks don't go up like this forever, which is why I put a put collar on, and I'll reevaluate that Monday. Why did I do what I did? On one hand, I could have sold the stock and put away $70 a share, and then if the stock trades up, I'm mad at myself. I'm not that mad. I'm just kidding. I could have sold a call against my position, and in a market that's not bullish, a sideways market, that's what I would have done, because if I go back, for example, and I look at Cyber here, let's go into trade, CYBR. One of the things I thought about doing was if I sold a $70 March call, I would have gotten $6.40. So that was one of the options that I looked at as well. So I had multiple options. I could have sold the stock for $70. That protects me by putting the money in the bank. I could have sold a call for $6. which would have protected me if the stock dropped down to 64. Below that, I would lose money. If the stock bounces up on Monday because it's taken over by Palo Alto Networks at $90, then I lose my upside. That's why I didn't sell the call. By buying a put at $70, I've limited my downside on my stock. Now, I have a short put at 60, which is financing part of my long put, and if the market starts to drop, I'll probably cover that at a loss because I want to protect my stock position. By selling that cheaper put and by potentially selling a call, maybe on Monday I'll look at something like this $80 call in the $3 range. I will have paid for that entire $70 put with that $80 call and the $60 put, and as long as the stock remains between $60 and $83, $82, depending on how much premium I get on the call, I will be ahead of the game, and I'm not limiting my upside as much by selling a call at the strike price that I mentioned. So that's just some of why I managed it the way I did. At the same token, I paid out some money to get that put. So this is CyberArk, nice move there. This is FireEye. Now I have a big position in FireEye. I'm not going to do the same thing, but suffice it to say, I got into it about the same time. And I got into it because mobile breakouts from a squeeze, I went green above, I had a number of pocket pivots, and this was a stock that was beaten up some, and it just was too pretty coming off this sort of a frying pan flat bottom on this weekly chart and breaking above. So FireEye had a good week as well, still looks strong. Microsoft fell off here, making its way back higher. Palo Alto Networks, this is the beast of the bunch. What a beautiful pattern. Now, I wasn't smart on this one. I made a few bucks on Palo Alto. This is one I wish I would have done a put spread and held on to the stock. Again, on that put spread, and I'll go back to CyberArk real quick. I'm going to look at VDSI. I'll look at VDSI first. VDSI is the weakling of the group. Not really the weakling, the laggard. It pulled back hard here, had good earnings, and then they reinterpreted the earnings and pulled back. I think this one's going to run next, and I bought a position in this one as well. VDSI. Every time somebody talks about being hacked, a bank or a company, it's good for these companies. I'm going to go back here and talk a little bit more about my management, because that's one of the things that I think is important. It's not just what do you buy, but how do you manage them. And this is what works for me. What I basically have done through my option strategy is I have set a put rather, at $70, which guarantees me the right, but not the obligation to sell my shares back for $70. I have purchased, I then shorted a put here at about $60. So if the stock trades up, nothing affects me. My put goes to zero. This put goes to zero. If I trade down between 70 and 60, I have protected my price at $70. When the stock breaks below $60, I have a short position which will hurt me and will go against me. My hope is that we don't pull back to 60, or if we do, I'm gone. I'll sell that very quickly or buy it back. And I can sell a call up here somewhere, not in the bongo land, but higher than the stock price, with the hope that that can pay off that expensive put that's guaranteeing 70. I could have also put a 4% stop loss or 6% stop loss, which would have cost me, which would be a risking $4. And my concern is that this is the kind of stock that gaps one way or the other, so I didn't do that. Too much talking, I apologize, but I thought it was important to talk about one way of how you might manage a position that's gotten very extended. Specialty pharma, Salix is being bought out. I think they're going to announce tomorrow. Everybody in the world knows because they announced that it was probably going to happen on Friday, that Valiant is buying them. A couple people asked me what should they do with their Salix. You know, the last time Salix had earnings, they got hammered. Their earnings are 2 weeks away. I think once this deal is announced, you know, you'll see how close the price is trading to the actual price being paid, whether it's stock or not. And essentially, if it's a stock trade, then you're basically trading in a percentage of a Valiant share. Salix no longer matters to me because I don't have shares. I do have Valiant, and you could see on the news Valiant was up big time, $4. And I think it's safe to say that that's all-time high territory for Valiant. Is this not a beautiful cup? Not really a handle here. What a beautiful saucer or cup base before it broke out to higher highs. That's Valiant, and you know, it continues to be a leader. It's funny, it was trying to buy Allergan, which it ultimately lost to activists. So, Horizon is one that we talked about weekly when it was basing. It broke out of the base, breaking out here. I'm not sure it's all-time highs, but it's broken out to all-time highs. And it has earnings coming this week, so be careful. Big earnings per share growth coming in. It has missed earnings in the past. This was July when it missed its earnings badly. So make sure you know about it. Be careful. But it's been a great player since we started talking about it. Endo looks a lot like Horizon, nice uptrend. So specialty pharma looks strong. Airlines. You know, if I had to look for my safe buys of the week, probably this group here, and probably look at all these above the index. They all have the same pattern. The pattern is my favorite pattern, uptrend, and let's look at Delta on a weekly to talk about what an uptrend looks like. No one's going to disagree that that's a big uptrend. This is a high close doji, by the way, a doji on a weekly, and then a bar, up bar on the next day trading above the high of the doji day. It's a bullish candlestick formation. I'm turning green here. I've retaken the 50. And again, this is one of my favorite auto trade stocks. Auto trade because I let it trade by itself if I was leaving. This is a stock that if it takes out this PSAR dot tomorrow, then I'd be thinking about getting back in the stock. I don't know if I put my stop all the way down here. I'd probably go to I might go to where the doji day is. That's about a 7% stop, maybe a little bit less. Depends on what you want to do. But the beauty here is we had a stock in an uptrend. It's pulled back to support. With a little bit of momentum, it'll take out the PSAR dot, and it will be a potential buy for me. That's Delta. I'm actually already in it, so hypothetically would be a buy. Here's American Airlines. It took out the PSAR dot on Friday, also sitting on the 50 with some pocket pivots. Look at the earnings per share coming into this stock. Here is United Airlines, I believe, basing at the 50. I'd like to see a kahuna or a pocket pivot before I jump in, or at least take out the PSAR dot. Also great earnings per share growth. Talk about a nice stock. Here's Southwest. Pretty good looking stock itself. Similar pattern. Probably the best looking chart of the bunch, which is JetBlue, which has already pulled back and taken off here. Had a kahuna on Friday, coming out of a mobile breakout and a squeeze. Everything is green. And take a nice little look at its earnings per share. Big fan of the airlines here. Allegiant's been a big runner too. Looks a lot like JetBlue. A high base forming here. Also great earnings per share growth. Low oil, good airlines. All right, let's go back. The next group down is biotech, and we'll look at a couple of these. Everybody knows I'm a big fan of Celgene. Talked about it on our board several times. Still a big fan of Celgene. It's breaking out again. Had a gap up on Friday out of a squeeze with the kahuna. You can see the earnings per share on an annual basis here. You know, as much as my buddy John is bearish on biotech because of seasonality, they're still holding up pretty nice. Now, I wish I didn't have this here, because if I didn't, I would show you that. I guess I can nail it this way. That we had a pullback to the 17-day and a big move up on the weekly chart. And that looks like it wants to run as well. Ariad is under pressure to have a new CEO come in. Reminds me a lot of some like that Firewide I did where it was just flatline for quite some time. I remind people of this day here and that this is a stock that's disappointed multiple times. Enough said. Vertex, pull back. Let's get out of the weekly here. Pull back, breaking through the 50, looks like an airline stock. Green there, Mobile, Pocket Pivot, and Kahuna. Here's Amgen, similar pattern, got to get above that 50. So biotech, not nearly as strong as it's been, but still pretty good. Here's Medivation. We've talked about this several times, including last week. Broke above the PSAR here, or Pocket Pivot. Kahuna, mostly green. And I'm a big fan of Medivation, have been. Anything here that I want to look at? Now, if you're into gambling, rolling the dice, you got Bluebird here that's inching its way up above the 50, probably a lower risk place to buy and a little bit less expensive, but a similar pattern would be Kite. Also inching its way, although not as vertical, its 50-day pattern as well. All right, that takes care of biotech, which remains strong. Automobiles, Tesla. Hard to believe Tesla's strong with the iCar being announced and Google having a car. And I'm not sure I'd call this strong. I didn't listen to Gil's webinar yet, but I can only imagine Gil thinking, get me up to the 200 so we can short it again. Tesla's been a great short on this way down, and every time it gets close to the major moving averages, it's been a shorting opportunity. I'm not a believer yet in Tesla. Fiat Chrysler has been in a nice move since coming back public. And GM is retaking its 200, looks good as well. So clear strength in the automobiles, both the traditional as well as the electric variety. Large pharma, not a place that we're normally looking at. To me, big, stodgy, boring, lots of risk of products going off patent. But we have a couple of charts here to take a look at. AbbVie, one of the hepatitis C war players, but also has Enbrel and a number of oncology drugs, sold off pretty hard. Had a big move on Friday with a Pocket Pivot and a Kahuna, and pretty good earnings growth for big pharma. I look at it as a biotech that pays a dividend of 3.2%. You want to buy these things off of support, and every time it's lived by the 200, it's had a nice move off. That might be a good time to buy AbbVie. Don't know much about Novo Nordisk. BMS, basing here on the 50, had a mobile breakup from a squeeze and a Kahuna on Friday. Don't like its earnings. A chart that I did like a lot was Eli Lilly and Company. And again, it's sort of a low-risk buy. It's sitting on free parking, which is known as a 50-day moving average. Had a Kahuna and a mobile breakout from a screen. Everything is green. It is starting to have earnings per share growth rate coming back into the stock. It's lapping some of its big patent disasters or off-patent times. Not disasters, just happens. Pays nearly a 3% dividend. Keep going. Look at one more group, and then we'll look at a couple of other things and say goodnight. Telecom carriers, let's look at semiconductor devices. They've been a strong thing. My favorite, I'll go through the first six and make some comments. Qualcomm, don't really see why it's in the top. It's had a big move off this bottom, sitting right under the 50. A failure at the 50 called an ice hole failure might be an opportunity to short. Right now, I'm not shorting anything in this strong market, but if this market rolled, that would be an interesting thing to look at. Maybe it's a long, but to me, it's under the 200. I would pass. IPG Photonics, don't know anything about them. I think they make lasers or something, power outlet fiber lasers and amplifiers. What a move on Friday. Multiple pocket pivots, OBV leading price, good earnings per share growth, greater than its multiple. I think this one is interesting. Intel Corporation, not so interesting. Skyworks, what a great lower left, upper right leader. Paused a little bit here, maybe giving a new opportunity to get in. Avago reminds me of Palo Alto Networks, both from the fact that it's lower left, upper right, and because I made money and sold out too quick. Missed the big run for a few pennies here and there. And then Micron, interesting chart of the day perhaps, sold off. You know, to me it hasn't regained the 50 yet. I'd like to see it close above and retest before I get interested. I don't like its earnings per share growth slowing down, and that has me concerned. It has been a leader. Okay, enough of looking at charts that way. Let me take a few minutes now for some of the newbies and give them some other things that we do in HGSI to find market-leading stocks. One thing you could do is just go into your designer view, and you won't have my user groups, but you should have the Woodward and Brown user group, and you open up these smart groups. And the smart groups are pre-planned scans by a number of people, including myself, Ian and Ron, Ghilardi, so on and so forth. And what you need to do is find your favorite scans and then look what's in them. I like to look at big volume in an uptrend. 3 times and 5 times usual volume. I like to look at breakouts from a squeeze. My biggest holding and company that bought my last business was Cardinal Health, which is why it's still my biggest holding. I kept a lot of their stock when I left, and I'm glad I did because whether you're Cardinal, McKesson, or AmerisourceBergen, you got the same chart pattern, which is a relatively tight lower left, upper right, and they're about to make an announcement. At least on Friday after hours, they announced that they're buying a unit of J&J, and the stock popped up to over 88. Been a great move for me, but I'm looking for that mobile breakout from a squeeze, and I get a list of those stocks here. This one here looks for stocks in an uptrend like Eli Lilly was that we looked at that have pulled back to their 50-day moving average, and then they have some element of a momentum coming in. And then one of my other favorites, and we'll see any of these I want to take, let's look at a couple of these, is stocks that are squeezing right below that PSAR dot. And I call these, as I said, get on an airplane and travel day trade because I could set my, let's look at American Axle. Haven't looked at this one. Hopefully it won't upset me. And well, it upset me because I used to own it. I don't own it anymore, so another stock with a great run. Yeah, this is perfect. To make this screen, and this is one of my favorite screens if I want to look for stocks that I can take low risk trades on. The fact that it's squeezing tells me that I'm either in a sideways base. I could be in a trending move, but most likely with that squeeze, I'm going sideways. The fact, and the squeeze also would imply that my moving averages are starting to get closer together. Now, it looks far away, but this is 24.75 and that's 23.75, so they're within a buck. But the real squeeze is the Keltner channel bands. You have the Bollinger Bands contracting within the Keltner channel, and that gives me the yellow squeeze. So I've got a mobile breakout from a squeeze on a stock in an uptrend, and the PSAR dot is immediately above the price. So if I was flying tomorrow and I wanted to buy this, this is like my favorite play. I put a buy stop, a few pennies above that PSAR, make that a little wider. And then I look and see where would I want my stop to be. Well, I would think that if I want to have a safe stop that's very unlikely to get hit, I might put my stop right there. So if I got an airplane tomorrow, the premise of buying this stock was that it's in an uptrend, it's went sideways, it had a mobile breakout from the squeeze, and it's right about to do a breakout of its PSAR. So I'd be interested in buying this if it breaks out above the PSAR. So we're at about 25.75. We're at about 24.50. So that's about 6 to 7% on my stop. And that's a pretty wide stop. I could have put my stop up under the 17, even below the low of the prior day. But this is a wide stop. I get on my plane. Market goes up 200 points tomorrow. I got taken out probably right away as a buy. And I'm in this stock with a stop in place. Market opens down 200 points tomorrow. Unlikely unless something bad happens that I'm not thinking of. So stock goes down tomorrow. And am I likely to be taken out? No. I'll never get bought because the market will open down, the stocks will open down, I won't take out the PSAR dot. Worst case scenario is I buy and I trade down and I get stopped out here. That's the price of admission. But I love these PSAR reversals in a squeeze because I'm able to put a stop in a close position. I have a clear place for my buy signal, and there are a number of people that follow the Wilder PSAR trading system, which means when that flips to green, and all that the stock has to do is, I'll show you how little the stock has to do. Let's highlight 22nd. The PSAR dot is at 25.61 and the stock closed at 25.57. All it's got to do is go up 4 cents and it's going to trigger a buy signal for that system. And I'm going to get in at that time. So I just wanted to point out a couple of different things. Let's see what else to point out. Another good place to look for good stocks is Ghilardi Sprinters, which has a ton of them today, which I think is a great indication of the strength of the market. And see if there's anything in my buy list that I've picked that I might want to show you. In fact, I got 15 minutes so before I'm an hour and a half into this, I think. Let's see what it shows here. Oh, crapola. All right, well, I screwed up. So I'm going to actually go back a couple seconds. And let me just check this real quick. All right, I wanted to look at some other ways. If this sounds garbled, it's because I think I hit pause and I missed the last 10 minutes. So I'm going to go back and repeat the last 10 minutes. I wanted to show you some other things that we do with HGSI, shortcuts to find good stocks. And very quickly, I look at my smart groups. These are up here in the designer. And these are a number of scans that are done free at night. Everybody gets access to everything I'm showing you. If you own the program, there's no hidden cost. There's no secrets that we don't share. I like to look at volume, 3 and 5 times normal volume. I like breakdowns and breakouts from a squeeze, looking for candidates. I like to look for stocks. This is my favorite signal here, squeezing with potential PSR reversal to the upside. Why do I like this? Because these are stocks that are squeezing, meaning the Bollinger Bands are contracted within the Keltner channels, and I'm looking for a momentum signal to show that the stock is breaking out. And since it's on a PSAR sell, if it takes out the PSAR sell button, then I'm reversing to the upside. So when I wasn't recording, I worked up American Axle, so let's bring this one up and we can talk about it. So American Axle is a stock, let me put this out here, which is the pricing, that has had a nice uptrend. It's done well with recovering the auto industry. And let's make my chart bigger. All right, so this is what shows up from my scan. The green and the red we'll talk about in a second. I'm pennies below the PSAR dot. In fact, the stock closed at 25.57. My PSAR reversal is at 25.61. So I'm 4 cents away from a PSAR reversal. This is my get on a plane and make my trades even though I have no internet access trade. Why do I say that? I've got my favorite type of stock in an uptrend, squeezing, about to have a momentum signal with a PSAR reversal. I can set a buy stop where that green bar is, and that green bar would be a little bit above 25.70, just a few pennies or about 25.70 above 25.61. I can put my stop over here below the low of this day, which would be 24.30. So that's a $1.40 risk on a 25.70 purchase. So that's a little bit less than 6%. So I've got 6% risk. So I set my buy stop and then I place a conditional stop order if I get my buy stop. I get on my airplane, the market opens. If the market opens up, then hopefully I will get filled close to my stop and I will make money on this trade. If the market opens down, it's likely that American Axle opens down and I don't get filled. And lastly, if the market opens and sells off, then I'm probably going to lose my 6% and get stopped out here. The reason why I call it my airline trade is it's very safe because I've predefined where I'm going to pay, what I'm going to exit at, and I did it for rules based upon the PSAR dot in a squeeze. And I find these stocks in this smart group or using my warehouse view, which is here, and I could apply it to, say, all securities if I wanted to. Or I just apply it to my buy watch. And see, none of the ones on my buy watch have that set up. Maybe I should be adding American Axle to it. All securities, these are the stocks that met that. I looked at most of these. The one I liked the best was American Axle, which is why I showed that to you. The other thing I like to do is, there's also Gallardi Sprinters. I find a lot of winners there. There's 150 today. That shows you how strong the stock market is. I also like to look at, under Ian Woodward and Ron Brown, the best of under $15. And they got a number of nice groups here as well. So I use top-down approach to find the industries moving to the top. I use a bottoms-up kicker by looking at certain scans. And I looked at about 800 charts this weekend. Let me show you in the last 10 minutes or so my favorites and why they were my favorites. And what I do is I take my buy watch list. I'm going to show you that real quick too. It's kind of cool. The only challenge I have with VectorVest is none of these signals are in VectorVest, but I can make these signals in Thinkorswim and TradeStation and other programs. All right, so these are the list of stocks that I'm going to be looking at. When I say it's my buy watch, all it means is these are stocks that have criteria that I find attractive that I'm going to monitor, and then if they meet my rules, I might be trading them. And I'll put them in a TradeStation radar screen, and I'll be monitoring this buy list throughout the day, looking for stocks that are going to either have pocket pivots, viable gap ups, mobile breakouts and breakdowns, as well as some of the other proprietary signals that I'm using during the day. I also have my handy duty earnings indicator, which tells me when earnings are coming. So I know that any of them have earnings in the next day or so, and I see that in the next couple of days. We got AKRX, Home Depot, etc. All right, so very quickly, let's run through these charts. You've seen most of them already, and then we'll say goodnight. I apologize for the disjointed. I don't know when it stopped, I'm guessing, so if I'm duplicating myself, I hope I'm consistent. Horizon Pharmaceuticals, we looked at this one earlier. Earnings are coming out on the 27th, so I'd probably leave it till then. Like the pattern, I did recognize it missed earnings here, and that would have me be a little bit concerned. But let's see what we can get out of this. But a nice uptrend and one I'm going to watch through earnings. Medivation, great chart, great company, great drug. Nice setup here. Too close to earnings. Earnings are out this week as well. Mallinckrodt, this is the old Questcor. They acquired Questcor. Great earnings per share growth, lower left, upper right. Earnings per share growing more than twice the multiple. That's, to me, a prescription for higher prices. ANIP broke out this about 10 days ago. I'm long this one. Will continue to add to my position. I like this one. I like its earnings per share growth. Avigo is one of these lower left, upper rights. I'd like to buy these on weakness. If you ever get weakness, great earnings per share growth, certainly a leader. Acorn, not as pretty as Avgo, but also a leader. Everything is green, nice uptrend. Wait for earnings, they're this week. VDSI, earnings are out. This is one of the security plays. I think they sold off by mistake on earnings. They sold off after a big beat because their margins are going to drop this quarter. But if you read the transcripts, the margin is dropping because of a one-time sale of card readers, which is a lower margin product. Their total earnings go up. Their margin, except for the card reader, are the same or higher. I mean, that's a one-quarter event. I think the stock goes higher. VDSI. I just got to find where I put my mouse. Come on. FireEye, another security play. I mean, this was such a beautiful, basing in. What a nice saucer setup here. And, I've been in it for a couple of weeks, maybe got in it too early. I think this one moves up the right side of the cup a little bit. Celgene, talked about it, breaking out again. Capstone, this is a packaging company, another one of these stocks that I had but sold too early. It's done nothing for months, broke out to all-time highs on Friday, pays a dinky little dividend. There are a number of packaging stocks that look strong. Skyworks, like AVGO, beautiful lower left, upper right, semiconductor company. Like to get weakness before I make my investment there. Same about Palo Alto Network, similar as Cyber, FireEye, VDSI as a group. Lower left, upper right, new highs. I had some, let it get away. Cambrex, biotechnology play, don't know anything about it except had a big Bible gap up. Going sideways here a little bit. Love the earnings per share growth enough that I'm going to do some research on this company tonight and figure out what's going on. Do they have a new product? They've got some revenue. And with these earnings, it could certainly justify a higher multiple and a higher stock price. IPG Photonics is a technology play, something with lasers and amplification. Great earnings per share growth, especially for a semiconductor. Big day on Friday. Another one of these right underneath the PSAR dot. The reason it didn't make my scan is it's not squeezing. Probably let it come back before I start chasing that one. Its earnings came out last week, which is why it bopped. Hanesbrand looks boring on this chart. This is not a boring. Underwear might be boring. That ain't boring. This is a move from a weekly chart in 11 of about 30 up to 120 4 years later. That's a double twice. That's a 50% annual grower. Breaking out to new highs. A mobile breakout, pocket pivot, and kahuna. This is Hanesbrand. Maybe a boring name, but a great pattern, 1.3% dividend. McKesson, Cardinal Health, and ABC all have great chart patterns. They're all the same. They've all been big winners of Obamacare because of increased volume through the system. As long as we have Obamacare and increased volume, these companies do well. But they've had big runs. This is McKesson. I think we'll see Cardinal soon. MasterCard. Visa looks good as well. I bought a call spread on these, a bull call spread. So I bought the near-term call and sold a further out call. And I did that because of what's called a SMILE volatility skew, where the volatility in the further out call was higher, which meant I got paid extra for that one. And I bought one that was cheaper, closer to the money, cheaper from a volatility perspective. MasterCard, obviously a great company, breaking out here to, let's see, I think these may be post-split new highs. Let's go to a weekly. Yep, to post-split new highs here. It had a huge run up. It had like a 7-to-1 or 4-to-1 or 5-to-1, a big split, pull back to its 50 weekly, but it's been running since, and just coming out of another pullback and breaking out pocket pivots, good volume, everything is green. Skechers, shoes, lower left, upper right, not really a beautiful cup and handle, but sort of a basing here, breaking out to new highs. Mercer International, another forest and paper products, breaking out to new highs. Great earnings per share growth, small multiple. If you don't pay a dividend and your earnings are growing much faster than your PE multiple, either your price goes up on the same multiple because your earnings go up, or your multiple expands and you get more reason to have higher prices. I think this one goes higher. Zyopharm, I took a position in this one, sort of in a bull flag here, pennant formation. Had a doji on Friday, and I'm in a position here. I like the name. I'm interested in going further, but I'm going to need to see it break out of this pennant to the upside, and then I might be into the stock for more. That's Zyopharm. Earnings are out in 10 days. Southwest Airlines, lower left, upper right. I looked at a bunch of airlines earlier. That's a nice looking chart. General Dynamics. The defense stocks, several of the defense stocks look good. This one's been basing, breaking out here, mobile breakout, and at Kahuna. Allegiant Travel, we talked about the airline stocks. Here's Cyber, here's JetBlue. Home Depot, nice run up here, sort of going sideways here. Look for a little momentum to come in. That might be something to pick up. Greenbrier, it's got to get above the 200 for me to be happy with it. Fell off when with concern there'd be less rail shipments from the Bakken. Problem is with all these trains blowing up and having fires, they're going to need more trains, and Greenbrier makes the trains. So I think Greenbrier and Trinity, long-term are safe bets, great earnings per share growth. And Total Systems, don't know much about them. A finance play, like the chart. Looks like it wants to take off from here. Nice earnings per share growth. Pays a little dividend. Here's my Cardinal Health. United Health Group, put Cigna here. Humana, all the same, lower left, upper rights. Looks like they're going again. All green. We'll be watching that this week. Don't know anything about Stereotaxis. I don't usually buy $2 stocks, but this is a stock that's been doing nothing for 3 years, and all of a sudden it breaks up above its 200-day moving average on a Kahuna and a mobile breakout on Friday in a strong group. I'm going to do some research, but I like the pattern for a cheap play. American Airlines we talked about. Rockwell Collins is another defense stock breaking out. Alaska Air Group, another airline pullback to support. Delta, we looked at already. Facebook, is it time? It's been basing now since October. Seems to me like it wants to go higher. Had a great week the last week. Terex, this is sort of a bottom fishing play in the construction and mining world, which has been killed. Look at the earnings per share growth coming in the second quarter. Teeny multiple, broke above the 50 with pocket pivots and kahunas. On balance volume is leading price here. I'm going to start nibbling on Terex. Eli Lilly, we looked at already. Hudson's Pacific, I just like the pattern. It's a REIT pullback to the 50. They've got some neat things going on in Manhattan. Blackstone Group starts kind of a loose chart here, but it's been a big winner for me. Still a winner for me. Now, what I really like about Blackstone is it has an 8.3% dividend. Burlington Stores, a retail play, lower left, upper right. Marine Backs, a retail play that's got a flag going on here. Colony Financial, don't know anything about this stock. I'm intrigued by a 5.9% dividend and a big candlestick on Friday. Pocket pivots, kahunas, mobile breakouts. It's worthy of some research. Herbalife, talk about worthy of research. When's it time to get into this stock? I'm not advocating it now, but this stock has come down from 84 to 36, and it looks like it might be done going down, so I'm a little bit interested in that, especially with it breaking above the 50. And JD.com, an IPO, had some pocket pivots last week at Kahuna, good on-balance volume. Lynn Energy, another energy play off the bottom. What was attractive here is it pays a 9.8% dividend. Remember, these are dividends. It's current price, last dividend. They got to be around and be making money to pay their dividend. And lastly, 3X Bull FAS big belt hold, bullish engulfing pattern taking out multiple days, and a pocket pivot on Friday. That would argue well for the financials. And then Sunoco LP, one of the refiners, buying it at a low risk place off of an ascending 200-day moving average in a squeeze with a mobile breakout, a kahuna, and pays a dividend of 4.7%. On that note, I better call it a night. I missed a couple here, finance, aluminum plays, and Newmont Mining, but I'm getting paged from the other room. So y'all have a great week. Hope you make some money, and hope to see some of you coming to the HGSI meeting. And this is Jeff signing off. Good night, everybody.